This TwinPetes Investing podcast is brought to you in association with SharePad from Sharescope, the UK's #1 investment data and analysis software for private investors and traders. Visit sharescope.co.uk and discover the advantage.
Hello and welcome to the TwinPetes Investing podcast. My name is Peter Higgins and you can find me at Conkers3 on Twitter, and I'm here with my good friend at Wheelie Dealer on Twitter, Peter. Here we are again, mate. It's Wednesday the 1st of December. It's 6 o'clock. We're in the dark months of December, mate, and we started off with the end of November being Black Friday, mate. Friday the 26th.
Friday.
Everything was red, mate. There was blood on the dance floor, as the song goes.
Oh, yeah, it was. I mean, Friday. Well, it all kicked off with the Omicron miscreant, or whatever it's called, a new miscreant. And it all kicked off with that, and everyone had a mad panic because, basically, it's like the government are putting the country back into a tailspin, and who knows what's going to come. I mean, obviously, the fear is that we'll have more restrictions and potentially a lockdown and whatever. So it's a very concerning time, isn't it?
Yeah, I mean, this new variant is going to be, and other variants are going to be around us for a little while. I think, having seen some various different specialists speaking about it, is something we're going to have to deal with and be aware of. But the market, as I've said numerous times, doesn't like uncertainty, with regards to potential lockdowns, more restrictions. Are we going to have to wear masks? Are we going to all be coerced to have the vaccine? For some people who have made it plainly that they're not going to have it, that's their choice, you know what I mean? So to be forced to have a jab when you don't want to have a jab, to be told that you can't work here if you haven't had a jab, this new variant puts a whole different dynamic on things, I think. So it's one of them that we need to be aware of and to consider, really, as to what we do with regards to keeping ourselves safe, because everyone's looking again towards December. It's a time all around the UK and the world where people tend to take time out and go and see family in various parts of the world and around the UK. So we know. And of
course, it's the time of year because we're under the meteorological calendar or something. Calendar it is officially winter, 1st of December. So we're now in the winter period. That's the time of year that COVID loves. What concerns me, that it's like the big worry I would have for the markets, is whether it tips the UK back into recession. And from what I've been hearing in recent weeks, we had a strong rebound when we first opened everything up. When was that? I don't know, back in the summer, whatever it was. When we first opened things up again and the vaccine program was going well, the economy rebounded really hard. And that was, great news. But the fear is that since that, the speed of the recovery has been slowing. And I get the impression that the economy, wasn't that strong. And the big problem now is that all we're hearing on the news is people cancelling Christmas parties, people scared to go to shops. I went to Sainsbury's on, Tuesday, and everyone's wearing a mask again. Everyone's doing the dance again. There's nothing on the shelves. And you just think people are getting, half the population won't care less. Half the population are now terrified. And we're back in that situation, and who knows where it goes from here.
Yeah, Friday was bleak, Pete, on the markets. Everyone woke up getting towards the weekend and expecting, more of the same of what we've had, where the market has been, not volatile, just coasting and climbing that wall of worry. And let's just have a recap here, Pete. The CAC on Friday, the 27th, 26th, sorry,
Yeah.
closed down 4.75%. The DAX, 4.15%. FTSE, 3.6%. Nikkei, 2.53%. Dow Jones, 2.53, sorry. Nasdaq, 2.23. S&P, 2.23. Yeah? WTI was down 13% as well. And gold didn't rally. The only thing that bounced significantly, if I remember the percentage, is something like, I'll be guessing if I said it right, but the thing that soared was the VIX, the Volatility Index, soared that day. Yeah?
And the thing to remember as well is that it was the day after Thanksgiving.
Yep.
It was a half-day market. Obviously, the volumes are messed around with. So it was, in a way, it was like the worst possible day for such news to drop.
Absolutely.
So I think that was part of the freak. But as I say, I mean, when you think about the markets, the CAC 40 had been hitting all-time high. The DAX had been hitting all-time high. The American markets were hitting all-time highs. FTSE 100 was on a 52-week high. But the trouble was, things like FTSE 250 had been weaker. The small caps have been really tough. AIM has been appalling, AIM All Share. And so already we'd had, for people like myself and yourself, and I'm sure loads of our listeners who do have small caps and stuff as well, it was a tough November. And personally, I found November a really tough month.
It was a tough month, Pete. I think what happened was we've spoken about this so many times, there was numerous stocks which have been loved stocks from the beginning of the year through to August, September, that have been hammered. Some of them come out with profit warnings, etc. And a lot of them have just drifted as a consequence. And unfortunately, sometimes that's what happens with stocks that almost... sort of Icarus effect, where they get too close to the sun, they get overvalued, and any bit of news that isn't as great as expected will get hammered. And if they have a profit warning, heaven forbid, down 30-40% in a heartbeat, so
and that was the noticeable change. That, to my mind, there was two changes in the market in October, November. Number one change was that profit warnings and trouble ahead updates started to appear.
Yes.
That hadn't been the case for about 6 months. We'd had a very easy ride. The second change was that up until October, November, valuation hadn't mattered. You could buy anything and it would have gone up. And you could buy something that was growing at hardly any speed at all. You could pay a forward PE of 40 for it and you'd make money. And that's a crazy situation. And valuations had just gone out the window. But in October, November, valuation started to count again. And even if a company was meeting expectations, it wasn't enough. And quite often they were selling, even if they met expectations, because people were reappraising the valuations and thinking, well, things have got a bit hot. And it comes back to what I'm always saying, that if you keep your valuation discipline and you understand, that anything that's on a PE of 30, 40, 50 has to be growing at an incredible rate. If you keep that in mind, it avoids you getting into these trouble situations.
I completely agree with you, mate. And this is why we're always saying keep an eye on momentum. The problem with the momentum is that momentum investors love momentum. So the share price goes from £1 to £2 to £3, and the buying and the buying and the buying and the buying. It's like, do you remember where this share price started from? It started at 50p or 70p. Right now it might be overvalued, but the cheerleaders are going to still be cheering their stock because it keeps hitting new highs. At some point or other, that momentum takes it to a significantly overvalued situation, and it only takes average news for that PE to be stretched, and then it has to go back and be normalised. We've had the news, Pete. Right? We were talking. I think I'm trying to remember back now. It's probably August time, if not earlier. We're talking about the Delta variant, were we not? Right?
Yeah.
And the concerns around that. And we just seem to just go, yeah, whatever. We're going to deal with that. Everything's fine. Everything's opening up. Everyone's going to restaurants. Everyone's going to pubs. Everything's fine. I'm going to various different places. People are hugging each other. People are greeting each other that they've not seen before. And then Friday, we have this big question mark about this new variant. Yeah, I can never pronounce it properly, so I'll try with my broken English. Omicron, Pete. Yeah.
Omicron.
And basically Friday, markets
Oh,
get walloped, right? Everyone's panicking over the weekend. All the futures are saying it's going to be another follow through on Monday. Markets are going to get spanked, and everyone's expecting the FTSE to go sub 7,000, right? After its 3% fall. What do we get? Market bounces on Monday. Yeah? Falls back back on Tuesday, bounces again today. We keep getting different news. The latest news that's coming out of the World Health Authority, yeah? WHO, yeah? Is basically saying the Omicron cases are mild and there's no evidence to suggest vaccine may be less effective against the variant. Yeah, that's what's coming out today. Hence the reason why the markets had another little rally. FTSE's up 1.55 today. So that's come out at 4 o'clock today. Yeah, the World Health Organization said that.
Yeah, that's interesting because a lot of us had figured that out back on Friday.
I don't know if a lot of us had, Pete, because the panic was still there and the markets were still declining. The markets were still declining over the weekend, and the markets and the futures were still down on Monday morning, and they rallied, right? Yeah. From about 8 o'clock onwards. We popped, and then again there was like, oh no, it's not. It's a bit concerning. Tuesday. That's why the markets went down on Tuesday.
Well, I mean, the way I viewed it was that on Friday, when things were very unclear, I put a small short on the FTSE 250, about 10% of my portfolio. So I got a little bit of hedge running, and that hedge is still running. Then I spent Saturday, Sunday looking into what was going on. And more than anything, I relied on the charts. And the charts were telling me there's a good chance of a bounce here. So I was actually quite pleased when on Monday we did get a bounce. And I thought, well, I'm not going to add to my short position when we're still in this state of uncertainty, and the charts are saying don't go short more anyway. So I did all that. But what was obvious to me, like from I was picking up on it very soon, was that South Africa was saying, well, it doesn't seem to be any worse than anything else, and we were just doing you a favour, telling you we had this new variant. And of course, all the countries have punished them and banned all the flights and all that kind of stuff, which has upset the WHO. So none of it is consistent. But what really strikes me about the thing is it's not so much what the variant will do in that. The problem is the reaction of politicians and the reaction of people to it. And we're getting this constant drumbeat on the BBC and the Sky that, it's the end of the world and we're going back into lockdown and it's terrible and we're all going to die and all the usual stuff. And that is what's driving the fear, and that is what I worry will cause a recession. And markets don't like recessions.
They don't, mate. And this is the problem. You've got World Health Organization, then you've got the sage scientists, saying completely different things.
Oh, they're a nightmare.
So
they're the worst.
My stance on the markets, Pete, is one of being very, very vigilant. There's stuff that I've got that's speculative stocks, and there's stuff that I've got that's core holdings. And the speculative stuff, I'll do what I normally do with them. I'll go, you know what? I'll either trim them or I'll cut them out, yeah? And I'll wait to see what happens, yeah? And that'll free up some cash for me. And then, I've got quite a bit of cash already, but it'll free up some more cash for me. And if the markets do go Pete Tongue and the FTSE does go below 7,000, and if people do have a panic at some point between now and Christmas, I've got the cash there to go back in the market, just like I did in March, April, May of 2020. And buy whatever I want that's on discount, that's on sale. When people have gone, I'm out of the markets, I'll start buying some more stuff. Got the cash there already to do it. Yeah, the speculative stuff I'll just get rid of between now and next week, or steadily over the next couple of weeks, seeing where the markets go. And on the days when the markets go up, I'll get rid of some stuff. Yeah? Yeah,
I mean, that makes perfect sense. I mean, that brings us to another thing about what is I mean, I know it's impossible for us to have any degree of certainty, but we can have a feel as to what we think. And I just want, what's your sense of what you reckon might happen to the markets in December? Do you think there's a chance that, for instance, on December the 31st, the markets will be higher than they are today on the 1st of December? Or do you think it's going to be a very difficult month? What's your your gut feel?
My gut feel is that it's going to be a very difficult month. My gut feel is that it's going to be a very, very volatile month. We've already had Friday, Monday, Tuesday and Wednesday plus 1% moves every day, right? 3%, 1.5%, 1%, plus and minus. 4 days in a row we've had that, right? I think that's going to be a continuation of that.
Yeah.
So therefore it's going to be volatile. The thing that I always say, and I keep coming back to psychology, you have to have your resolve. Yeah, you've got to make your decisions. I had a long conversation with 3 or 4 people over the past few days that said the same thing, right? If the markets go up, what are you going to do? Oh, I'll buy some more. What are you going to do if the markets go down? Oh, I'll sell some. I think you have to make your mind up before the market tells you what to do.
Yeah.
So
do you have like so say for instance, so effectively there's, well, I suppose we could say there's 3 options, right? There is, yes, I think the market will fall. Yes, I think the market will stay flat. Yes, I think the market will rise. And out of those 3, you'll have one that okay, you're prepared for all 3 scenarios. Yeah, obviously the one in the middle where it stays the same, you don't need to really worry about too much. But there's the fall or the stay the same or the rise. Which one out of those 3 are you more leaning towards, if you see what I mean? Yeah, which one would you give a 60% weighting and which one would you give a 40% weighting out of the up and the down?
I would go down. I would say...
Okay, so you're more weighted...
Let me finish, Pete. Let me finish. Just ask me the question. Let me finish.
No, I like that.
Let me finish. Yeah? I think there's a 60% chance we go lower from here, right? And the reasons why are the uncertainty, are the reasons why mutations, right? And the risk of, other countries getting outbreaks of this thing, and saying we're closing our borders, we're shutting down, we're locking down, blah, 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 blah. We're having lockdowns before this Omicron variant was discussed, Pete, in Europe. I was raising that concern in the last podcast. What happens if we get more and more lockdowns? What happens if we have lockdowns here? And that was before the Omicron one. Right, so we're now getting mandated that we're going to have to wear masks in public places and on local transports and so on and so forth. Yeah, that's just the first step. Yeah, if we get a large number of cases, then we're going to have to take more measures. Yeah, if we get to the point where the restaurants and the pubs at Christmas are not letting us in for whatever reason, heaven forbid.
Oh yeah.
You know what I mean? So I could be completely. You've asked me as an individual what my view is. And I would be very, very cautious. And I would suspect that we're sitting here now at the FTSE at 7,168. Yeah, we've had the 52-week high at 7,384. I would say our 52-week high is in, right? Yeah. And the chances are we could see sub 7,000. I want to be completely wrong, right? I want to be completely wrong and believe these scientists and say, this is going to be mild. This Omicron's going to be mild, and we can go around with masks. We can still go to the pub. I can have a New Year's party. People can enjoy themselves. It's been a rough, tough year. It's been horrible since March 2020, Pete. So let's just have some time where we can enjoy ourselves and chill out, and do what we need to do. I do not want to hear my friends on the phone going, I'm sitting on my flat on my own tonight, Pete. Where are you? And me thinking, do I invite them over? Is it safe to do that? Or do I actually go and see them and leave my family so I can spend time with them because they're on the Jack Jones? Yeah,
it's. I mean, that's such a good point. For myself, it's interesting because one of the reasons I didn't hedge more, even though my sort of instinct was to hedge more, on Monday, Tuesday, the reason I didn't hedge more was I kept remembering a very simple principle that December tends to be the best month of the year, and that's through for so many years now. December has been a really strange month, really, where you get these incredible Santa rallies between about the 17th of December and the end of the month, when things are really thin volume and the markets are barely open and all the rest of it. But you sort of get this drift up, and it'll be really interesting to see if we get that again. But my own stance, I mean, God, if I was to say, do I think it'll be up and down? As things stand today and looking at the charts today, I reckon we'll probably be higher, but I wouldn't give that much of a weighting. I wouldn't be really committed to that. And the reason I say it is that if you look at for instance, you look at the FTSE 100, one of the most interesting things about it is it put in a hammer yesterday, and today it rallied off that hammer. That's quite a nice setup for bulls. If they can't take that higher, then it's a poor show, really. They ought to. And bear in mind, Jason Stealth Surf, who at Stealth Surf on Twitter, who was on the podcast some episodes ago, he's been saying on Twitter, we are near all-time highs. That is not a time to start getting hugely bearish. And I thought that was an interesting point.
And Jason could be right, Pete. Jason could be absolutely
spot
He
often on. Is. He often is.
As that quote goes, more money's been lost calling tops than blah, 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 blah. You know what I mean? And he could well be right, and you could be right. You asked me my personal opinion. That's just my opinion. I'm overly cautious when it comes to things like this. Why? Because politicians are known for more U-turns than a biker doing the bloody, you know what I mean? Yeah?
Doing
There's too many U-turns, Pete. And we've been here before where they've gone, don't worry about it. We've got this sorted. Just wear a mask. Make it mandatory to wear a mask. And then we get the next week another thing we're being told to do, and another week we're being told what to do. When it comes to politicians, I'm always cautious, mate. Joe, when it comes to if markets didn't have to deal with politics, I'd probably be bullish. I'd be like, yeah, Pete, you're spot on. It's December. We get the rally, 17th to the 21st into the new year, and we'll be absolutely fine. But that works until it doesn't work, Pete.
Well, I mean, this is what I'm saying in the sense that when I say, I think saying I'm bullish is perhaps over egging it. I think what I'm saying is, will the markets be up or down on December the 1st? I would be mildly on the side of them being higher, but probably not by much. I can't, as you say, I think the main story is volatility. I think we'll get a lot of chop through December, especially the first 2 weeks. I mean, the first 2 weeks December would just be chop, 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 volatile.
Yeah, I completely agree. I think the other thing to take into consideration here as well, Pete, is that it's been one of those years where right up until August, September, everybody was making hay, right? People were talking about their portfolios being at all-time highs, their portfolios being up 15, 20, 30, 45%, blah, 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 blah. All that's been given up, Pete.
Yeah.
Lots of people are now sitting at single figures. Some people are sitting at minus for the year, giving it all up, right? So they're desperate for a rally. There's some stocks that people are holding which have got 5% weighting to 55 to 45% weighting in their portfolio, and that's sitting at minus return for the year, that particular stock, and that's taken their portfolios down to flat or just plus or minus. What happens to that stock if it comes out with a profit warning? What happens if the markets goes belly up and we're sitting at 6,500 on December 31st?
Oh, I mean, if you've got a concentrated portfolio.
No, but irrespective of that, Pete, I'm just saying. This is what I'm saying. So we've been here. If you look back at the charts, right, at December 2020. Sorry, 2019. We had the rally, did we not, in December?
Yes,
and we did. And the markets are doing quite dandy. Thank you very much. Despite the talk or muted talks of COVID in China. January, February, and then it got louder and louder. The cacophony got louder and louder in January and February, and then March, whoosh. It was like, oh my gosh, didn't see that coming. The warning signs were there. The difference this time, Pete, is that we experienced what happened last time with COVID, and I think and I pray Boris and co have got different strategies in place and better strategies in place, and are not so ad hoc. And if they do the things they need to do immediately and proactively rather than reactively, I think the markets could do well, right? But if they do this ad hoc U-turn business again, mate, I think we just have to be careful. So your view is I'm more cautious than you on this, yeah? It's not about being bullish or bearish. You're less cautious. I'm more cautious than you on this, and you're less cautious than me. That's fine.
But if anything, I'm not wedded to that view. I am flexible on that view. But the simple fact is, I will be looking at those charts and doing what the charts tell me to do. And if I get a feel that things are definitely problematic, I'll be shorting more. And that's the way I'm going to handle it. So I'm not married. When I sort of said to you, I think it'll be a bit higher, I'm not totally married to that view. I'm hoping it happens, but I'm definitely not married to that view, and I'll switch the other way, just like a flick of a sixpence, Something that's interesting about the economy, I just want to throw in quick. In my experience, we tend to get bear markets, nasty bear markets, when there's a recession, or when when the economy is tipping into recession. That's when we tend to get them, and they usually last about 6 months. Now, one of the things that has come up in the economic data is that over time, through the last 18 months of the COVID period, the economy has got better at managing within the constraints, and the economy has sort of limped along and done better. And so it could be interesting that even if we do go into lockdown or whatever, we might find the economy just about manages to stay just about positive or whatever, rather than going into a heavy recession.
I think the caveat with that, Pete, is the fact that we had a conversation when we had Seth Levine on, talking about inflation, and I think the three of us came to consensus that it's transitory. Yeah.
Yes. Yeah.
X amount of months later, inflation just keeps climbing. It doesn't seem to be transitory in the UK at least. Yeah. The pump prices, you go in to do your weekly shop. Yeah. The price of butter, margarine, wine.
Butter.
Yeah, butter.
Horrendous butter. Horrendous.
All of it's going up, potatoes going up, apple going up, tomatoes going up. So if that feeds across the whole supply chain, Pete, it means that everything else is pricier. We're already talking about gas and electric being higher than it was this time last year, and the price of energy. Yeah, we spoke about petrol last time and the price at the pump. So if that knocks on, if companies that are listed on AIM and the FTSE and elsewhere haven't sorted out the supply chain, that could trigger a recession, or not a recession, but more profit warnings, Pete, for the companies that haven't prepared themselves for the price hikes.
Again, that's interesting, because there's conflicting signals here. One of the things I'm picking up, and there was a big thing about it from the haulage industry yesterday, was that actually the haulage situation is improving. I mean, it's still dire, but it is improving. And there's talk that the supply situation around the globe is improving. So maybe that isn't quite. When you look at break down the inflation data, what I've been hearing when they project it forward, the data's made up of three things. And the biggest one is energy cost. The second one, I think, was tax rises. And the third one was something else that I can't remember, but it was so small it's irrelevant anyway. And the thing is, the energy one is starting to ease. And that is by far the biggest one. So, it's the classic thing that the best cure for high prices is high prices. And we're already seeing that oil, as you said, it dropped, was 11% or 14% or something on Friday. If oil comes off, then it makes the whole inflation situation a lot easier. And obviously in the UK, one of the things that helps with inflation is the currency. In terms of slowing down the economy, the fact that the pound has been really weak, that actually helps to reduce inflation, although imported inflation is obviously higher. So it's just such a complicated mess, to be quite honest.
You make a very, very good point there, Pete. You make a very good point, and that's what people need to make sure that they're aware of. What does the listed company or fund that you're involved in, what does it do? What are its costs? What are its margins? And if you've got paper thin margins, then they're going to be negative margins. Yeah. Can they pay this push this forward towards somebody else, to the customer or the clients or whatever? And if they can, then they've got a little bit of wiggle room. But those companies with no wiggle room are going to be putting out profit warnings. We've seen them coming from companies that we didn't really expect, Pete, already.
Oh yeah. Yeah.
So I suspect there's some more to come from some companies that we didn't expect it. And I think a lot of people that are in those companies are going to be taken aback, because it's like, why haven't the CEO and CFO come out and said, we've got this in the previous trading update. This is a concern. You've got some companies that haven't given trading updates that previously would have done. What are they waiting for? Are they waiting for some good news to actually prop up the next trading update? Because if that news isn't good, then it's a double whammy, isn't it?
This is a quick hello to you, our valued TwinPetes Investing podcast listener. Whatever channel you're listening to, please make sure to subscribe, and you'll always be the first to get the new episodes. Thank you for your continued support.
That's such a good point. One of the things that sort of stood out in a way is, you think about it, for years and years and years, and well, forever really, years and years, companies have been getting more efficient. An incredible thing is that a lot of companies are still squeezing out efficiencies now, even after all that time. And that I always think it's just amazing. And then there's other companies that are really struggling. And it's that classic thing that loads of companies are reporting and saying, oh my God, we got terrible problems with supply issues. Other ones are saying, we got problems with supply issues, but we can deal with it. And you can see in the figures they are dealing with it. And it's actually really impressive how many companies have dealt with these things. And the same old story that the ones who haven't are getting caned.
Absolutely. I've spoke to a former CEO who's an angel investor and venture capitalist and NED at numerous places and a couple of listed companies. And we were speaking about back office efficiencies and inefficiencies. And I asked her a similar sort of question, Pete, and she the nut of it is this, right? Every single company out there could be more efficient. There's so much waste, there's so much cost that, that should be reduced and could be reduced. So there's always room for efficiencies. And I was like, wow, I never thought of it like that. Because you think, that company there couldn't get more, but it can, and you know what, Pete?
It's amazing.
When push comes to shove, they always find opportunity to cut something, don't they? When it comes to shoving, when the markets are being kind and everything's going up and everything's rosy, it's like, we're all right, we can carry that. The minute it gets bad, capabilities are the KPIs are all out, aren't they?
It is quite remarkable. I mean, it's the standard. Incredibly, it's a standard principle of economics that over time companies get more efficient. And I must say, sometimes you think, how can that be possible? But I have to say it through my short lifespan of 20 years, however old I am, and you're a little bit younger than me, aren't you? You're about 17.
No,
I'm
not younger than you, Pete, but I'm just bolder than you. Let's say that.
in our incredibly short lifetimes, we've seen this efficiency actually play out. I can remember working for companies where they had 70,000 employees, and when I left them, they had 10,000, and they were bigger and more profitable and more revenue than they'd ever had. And it's just remarkable how that happens.
Yeah, tech, mate.
It's tech. Yeah, you're right.
It's a lot of it is tech, moving from old machinery to new machinery, and also getting staff that are more efficient, that work a tad harder. And actually, I think gone are the days where you're clocked in and clocked out. So people are actually working more hours, bizarrely, than they were before.
Do you know that it plays? You mentioned tech. It plays into a stock that reported this morning, which is TPX, which used to be the Panoply Holdings.
Yeah,
that came out results today. I still think I don't hold it. I still think that's a digital transformation play, and it's mainly focused on public sector, I believe. But you think, right, one of the problems, it's interesting because one of the problems I think there is with tech is that tech can bring you in enormous efficiency gains, right? But the problem is the way it's being implemented over time, you tend to get a system here, a system here, a system here, a system here, and it just becomes a mess of IT. And it's not cohesive and joined together, and I think where companies like TPX are really scoring, digital transformation really comes in, is that in a way they're sorting out this higgledy-piggledy mess that has gained a lot of efficiency savings over the years, but they could have been better if it had been implemented in a better way. And TPX are doing a lot of work around that. And I think that one still looks interesting. We mentioned on a podcast about a year ago, I think.
We mentioned it a while ago, I think, Pete. Those results, it made me sit up when I saw them this morning. I'm looking at it now, Pete, again. Revenue plus 77%. Group gross profits up 57%. Adjusted EBITDA. People don't like EBITDA unless it's soaring. When it's just meh, it's like, EBITDA, we don't want to look at EBITDA. But EBITDA plus 83%.
What?
Yeah. Adjusted profit after tax, 109%. And as I sat and I thought, wow, they are absolutely knocking the doors off, and sales backlog, 98%, Pete. So that's one that caught my eye this morning. I just couldn't bear looking at the share price because it's one that I didn't look at when I should have looked at it. Everybody that's got that stock, I congratulate them. Back from when it was called Monopoly, I think some people have been in there. It's called TPXimpact Holdings now, Pete.
Okay, TPXimpact. Okay.
Yeah.
I looked on SharePad this morning when I was looking through the RNS and that, and I put it out on Twitter. And I think from memory it was on a forward PE of about 24. Now for the growth rate, that isn't bad. I'd say that's pretty good value.
Yeah, it closed up 4% at £2.75. Let's see if it shows me how well it's done this year. Let's have a little look. It's up 1 year return of actually it's not showing me it's 1 year return. It's up 32%. Year to date it's up 47%. So yeah, so it's done very, very well. It's got a high of 325 and it closed at 275. I think you could see a little bit of a re-rating there, Pete, on that one. But yeah, they're in a sweet spot and they're doing well. It can't be classed as a COVID recovery play or a lockdown booster. It's a stock that's just doing very, very well because of what it does.
Absolutely, yeah.
So yeah,
I mean, digital transformation DX is a big thing. There's no doubt.
Yeah, it's a good one. It's a good one, that one.
You know, mate.
Sorry, go on.
I need to ask you about commercial property.
Can I talk about have a break here and talk about the charity for first, mate? We're going to go on to that big stuff.
Yeah.
Right. I want to once again thank everybody who has helped out. Not only, and this is how generous our listeners are, Pete. I was asked, because I've become an ambassador now. I think I mentioned that on the last podcast. I've been anointed as an ambassador for Menphys, and I was asked to promote their Christmas list, which will be going out. Well, I think some people have already started actually, delivering Christmas presents to disabled young children and their families over the next 3 weeks. So we're going to be going around Leicestershire delivering presents. Last year we delivered, going on to, I think it was 1,000, if I remember right. I don't remember the exact number. Nearly 1,000 presents to young people.
Yeah.
We are on course last week to be delivering 557, which is a lot lower than we would hope for. Maybe we just got an extra boost last year because we had lots of businesses help us. But we would like to get near as damn it to 1,000 again. So I was asked to promote the Christmas list, the Menphys Christmas list, where people donate £15 or more, and that guarantees us to buy at least one present. And we actually had quite a few of our own listeners jump onto the Menphys Christmas list.
Brilliant.
And you can find the Menphys Christmas list at justgiving.com/fundraising, the Menphys Christmas list 21, right? We had, let me just find some here that actually mentioned the show. Let's just have a look here.
I'll give some money to that, mate. So after
this is about anonymizing it as well. A podcast listener.
Oh, I know him.
to Peter, thanks for everything you've done for me and your great efforts for this charity. £100 and £25 gift aid. So to that person, brilliant. Thank you ever so much for making that donation. I know Mike Ridyard made another donation as well to this, a new one to this charity. Mike Ridyard at Ridyard Mike, thank you ever so much. I've enjoyed listening to all your podcasts, new and old. I'm sure many an investor has profited from your wise words. Well done, £100 there. So thank you, Mike. I'm not sure of whether Mike was the first one or there was somebody else after that. But yeah, and then Anonymous made another donation there. But yeah, so that was the Christmas list. So anybody that wants to help the Menphys Christmas list, I'll be adding it into the write-up of this podcast, which will be on Pete's page and my page. And you can find them at the Just Giving page as mentioned. We've got our own, obviously, TwinPetes Challenge. We've already donated some money for that Christmas list via what we've already donated. So they're going to be buying 250 presents from what we've already donated.
Oh, that's good.
So that's already been guaranteed. But thus far, we're sitting at £18,655 raised.
Brilliant.
And some of our listeners that have donated very kindly more recently are Scott Porter, who donated £10 and 11 pence plus gift aid. Di Edwards. Hello there, Di. TwinPetes, thank you both for all your hard work on the podcast. I always enjoy listening. Great work too on raising money for Menphys, a fantastic charity. All the best, Di. £100, Di. Thank you ever so much for that.
Thanks, mate.
Claudio H. Fox, again, a second or third donation, I think. I think he keeps... This is what I love Claudio, because it's like, this is he promises to, when he's not going out for a curry and a beer, to donate the money instead.
Oh, excellent.
So here's the value of another curry and a beer. I said I'd continue to contribute, so here you go. I hope you get... I hope it would be great to reach £20,000. When I get back to Leicester, I'll hopefully visit the hub in Wigston. £30 plus £7 gift aid. We had at Duni Beer, and that's at DUNI Beer, or Bear, sorry, Bear, my pronunciation. Duni Bear support team donated £100 plus £25 gift aid. Thank you ever so much.
Wow.
My good friend Suzanne Tufel and her partner Stephen Tarlett, or Tarleton, depending on whether you pronounce it in French or German, donated £100 and £25 gift aid.
Cheers, nice one.
So that's helped again. We had Jim Walsh donated.
Hi, Jim. Yeah.
Jim Walsh, and he's in brackets, he's put, "What have you saved me?" Right. Thank you both for your podcast, and a special thanks to Wheelie for all the help over the last couple of years he has given me. Jim Walsh, £40 plus £10 gift aid.
Cheers, Jim.
And we had Elizabeth, I think that's at Lizzie Dip, because we've spoken with Lizzie.
Yeah, hi, hi Elizabeth. I hope the new car works out well.
Brilliant. So great show again. I've learnt so much from both you gents. Thank you. And also, so important to keep looking out for friends, family and neighbours, colleagues at this time of year, especially £20 plus gift aid. And then I think this is your friend, Pete, Aday.
Oh, Aday Ajitamobi. Hi, Aday.
Yeah,
hope you're right.
well done,
TwinPetes.
Keep up the good work. £100 plus £25 gift aid. And our good old friend Scrumpy donated another £5 plus £1.50 gift aid. And Terry gave us £2, regular £2 there. And as I said before, I'll be matching whatever the total Terry's donated so far. I'll be matching that come December the 31st. So that's where we are.
Everyone.
We're still pushing for £20,000, folks. If you can, if you've not donated yet, if you've got one bit of good insight from the 62, 63 podcasts, 66 podcasts we've done, please donate what you can before December the 31st, and just give your support to these disabled children who are in need of some love and a bit of kindness from you, me, and everybody else. So the Just Giving page again is justgiving.com/fundraising /TwinPetes challenge to make your donations. Please do so if you can. Pete?
Nice one. Right, yeah, mate.
Sorry, you mentioned your mate Aday. Tell us about Aday a little bit.
Oh yeah, well no, she's a good friend that I've known her for God knows ages, decades, and we used to work together in Fujitsu. And basically she sort of does very similar to what I do with her portfolio. So it's largely what she holds is largely a mirror of what I've got, and she's been doing it for a long time now, and we've done well over the years. Her SIP has been growing and growing, so yeah, we're nice and happy with how things are going, and yeah, it's good.
Brilliant. Aday, thank you ever so much for your support. Everybody that's donated so far, you're blessed, cherished, love you all. Thank you all so much for being so kind and generous. And your kindness will be warming lots and lots of hearts come this Christmas. So thank you very much.
Excellent. Mate,
Go for it, mate.
Commercial
Go for it. Let's hear.
Yeah, well, I've been in a bit of a slight quandary. Not much of a quandary, because you know me, I don't like to rush into a quandary. I like my quandaries to build up over several weeks. I don't want to make a decision, for Christ's sake. I want to think about it, like forever. I want to think about it forever, really. If in an ideal world, if I could, I would think about things forever. Right, yeah. I hold Lok'n'Store LOK. And I don't know, I probably bought it about a year ago or something. And I thought it would be a good one. I thought, yeah, I'll buy this and it'll be all right. Nice little, they do like, big storage boxes. Like it's a bit like Big Yellow Group and
Yeah, I know the company.
Safestore and all them sort of ones at SAFE and Big Yellow BYG. And, I bought it and thought, yeah, it's all right. But it's been sort of like a bit amazing, really. And I think I don't know, it must be up like 40, 50, 60% on what I paid for it. And it's just been really good. And I'm starting to think, how long can this run keep going? And what I notice is it's not just LOK, it's lots of commercial property stuff, a bit like that, has done well also. I mean, BYG, Big Yellow Group, is absolutely bonkers. It's on a premium to NAV, so a premium to net asset value. So that's, the share price, if you take away what the underlying assets worth, the properties, it's on something like a premium of like 85% premium, which is, I've never heard of that ever. Things might in the past have got to a premium of maybe 15%, but not 85. And these things just seem to have done amazing. And I noticed that you hold Palace Capital PCA, which for some strange reason I know is run by a bloke called Neil Sinclair. I don't know why I know that, because I've never held PCA, but that sticks in my brain. And that one, had good results and it's done well and property valuations are up and all the usual good stuff. So I just want to get your feel on what you think's happening with the commercial property market and particularly that sort of storagey area and when, maybe you need to think about top slicing it or whatever.
Pete, the self-storage sector has been an absolute tear, mainly because of all this the logistics supply chains concerns, right? They're resilient. They've got a nice yield, and they've just been on an absolute, a tear. Like you say, a lot of them are just sitting at premiums now. The one you haven't mentioned there is EBOX as well that I used to hold.
Oh yeah,
Tritax, and then you've got the European one, which is EBOX, European Tritax EuroBox. And that's actually sitting at a discount, and it's one of the stocks I wanted to talk about later on as a stock to actually consider. So you've got Safestore, that's up something. I found a tweet from Tony Watson here that replied to you earlier, at Tony Watson M, and he's got here, I'm not sure what time he wrote this, let's have a quick look. This morning, Safestore was plus 54% for the year, Lok'n'Store was 49%, and Big Yellow was up at 35% for the year. So all that sector's had a really, really good pop. If we try and find Big Box, it's a similar sort of thing. But all of them, Pete, are sitting at premiums to NAV, right? And the reason why is because of the security of this income that they've got. They've got most of them have got quite large blue chip entities that are using their facilities, and it's the strongest performing sector within property. Yeah. You spoke about the concerns that now this is getting really, really overstretched. I think when I sold BBOX, I thought it was stretched, and the premium has gone higher. At some point or other, of course, things have to normalise, Pete, but I don't know when that will be. What you have to do as an individual is assess, you know what, it's done well. Yeah, it's overstretched right now. Lock in some profits. Take a trim some if you want to do that.
Lock and store some profit.
Yeah, lock and store some profits, mate, and reinvest it somewhere where there's a discount. That's in a similar sector. Or
if you've got Safestore, mate, you want to lock in some profit so you know it's safe.
Absolutely, but this is what I'm saying. It's about being canny, Pete. When things get overstretched, don't wait for the market to wallop you on the chin and take away some of your profits. Yeah.
Oh yeah, I mean,
take some yourself. And if it goes higher, it goes higher. So what?
Yeah.
This I asked somebody on Saturday. What are you going to be happier with, right? Taking some profit now, right, and it goes higher, or waking up on Monday, or next week, and the share price goes down 10-20% because the market goes, this is just overvalued now. Right? What would you prefer? What would you be comfortable? I'm always comfortable with taking the profit and watching it go higher rather than getting stunned, by 20% when the market goes, sentiment's over with now, mate. Bye bye.
I'm totally with you, mate. I mean, I always see it that if you top slice, top chop, whatever you want to call it, you win both ways. Because if the market keeps going up, you're still in the game, you're still making money. If there's a profit warning on Monday morning, it gets clobbered. You've won because you've reduced the damage. So I just think it's a bit of a no-brainer. Obviously, the question is at what point do you top slice, and we've discussed that many a time on podcasts before. One of the things with LOK, and it's interesting because you said how ones like PCA, Palace Capital, BBOX, and that they've still got reasonable yields or whatever, forward dividends and stuff on them. But one of the things with LOK is it doesn't even have much of a dividend. I don't think BYG has much dividend, and Safestore probably is seeing that dividend reduced.
Yeah.
And you just sort of think, I mean, with LOK, it's also a growth story,
Yeah. PCA doesn't have anything in storage, but BBOX and EBOX do.
No.
So you can take PCA out of the equation.
Yeah.
But I think BBOX is at a significant premium. EBOX is at a discount. So it's one of the few in the storage space that's at a discount. So that's the one I'm looking for.
Which is that EBOX?
EBOX, yeah.
Wow,
Tritax EuroBox.
Yeah, I'm almost amazed to think that there's actually a stock that's a discount to NAV in that sector. But obviously, because it's European, you've got currency risk and complications and that. Yeah. But I don't know. It's funny. I mean, LOK. It's got the brand of Lok'n'Store, a bit like Big Yellow's got its own brand, and all these kind of things. It's doing a lot of great growth initiatives. So I don't think I'm like desperate to sell it, but I am starting to warm up to the idea that I ought to trim it at some point.
Profit's a profit, Pete.
That's the thing, isn't it, mate? That's
and given the way we started this conversation about uncertainty of stuff, they've done well because they're in that storage space, and part of the supply chain and the last mile storage for behemoth and so on and so forth. So they've done very, very well. But how long can that continue? I don't know. We were having this conversation in a year's time and the share price is up 30-40%. Who knows?
Yeah. Well, we'll see what happens.
Whether you are an experienced or new investor, you know how valuable it is to conduct portfolio enhancing analysis and to have easy access to data that will give you the edge. As a TwinPetes Investing podcast listener, you can access an exceptional offer via SharePad from Sharescope, the UK's #1 investment data and analysis software for private investors and traders. This special TwinPetes offer is available to new subscribers only, and you can subscribe using the promo code TwinPetes. The incredible and exclusive offer means that monthly subscribers will get their second month free, and annual subscribers will get their 13th month free. Sign up and subscribe to SharePad today using the TwinPetes promo code, and you can save up to £69. Visit sharescope.co.uk/SharePad for further details and subscribe to the investing and trading analysis and data you need.
So, mate, you said before we started the call that you had some stocks you wanted to suggest as potential.
Yeah, I mean, we spoke about this before. About we've had a torrid. I think we had a torrid couple of months, really, Pete, for some people. And I did say I'd talk about a couple of stocks. I haven't got time to fit them all in now, but I'd like to talk about at least two because we're at 51 minutes in now. I think the first one I'd like to talk about, and this could appear to be what some people would call a recession, cyclical lockdown winner that's now rolling over. But I saw the numbers today, and I was actually quite impressed with them. And I'm talking about top tiles, Pete. Yeah?
TPT, is it?
TPT, yeah. And I saw the numbers today, and I was quite impressed. And the share price has been rolling over. It's been at its high not so long ago, 81 pence, on the 27th of September, and the low was this time last year, the 11th of December, at 53 pence. And it just appears to me that they could be on their way back. They've resumed the dividend payment. They're looking stronger, but the share price was nearer to its lows and today it had a little bit of a pop and gone up a couple of percentages. And it just to me, I'm looking at that and thinking, actually, they're not doing too bad, right? So they've recorded record year of revenue for the group. Yeah, this is the annual results that came out yesterday.
Yeah.
Group market share for a goal of 1 of 5. Good progress made in the year. Commercial revenue recovering with sales growth of 55%. And it just to me, group revenue plus 18%. I thought, that's pretty decent. Yeah. Basic earnings have gone 5.59 from minus 4.1. They're paying a final dividend of 3.1 pence. The share price is there at 63 pence. So if they paid a half dividend next year, if they're doing okay, you should be nearer to 4 pence maybe for a share that's at 63 pence. That's quite a nice chunky dividend. You know what I mean? Like-for-like sales were at 19.6%. Adjusted profits was at 15.3 million from 3.6, an increase of 325%, Pete.
Oh, that's juicy, yeah.
And adjusted earnings per share plus 290%. And they've got cash. Cash has gone up to 27 million. I just thought, you know what? The share price has rolled over. Everyone's gone, it was a lockdown winner, and now who else is going to be tallying their house? I don't know the answer to that, but for me, it was just one of them stocks. I thought, actually, they seem to be doing okay. You know, they've taken their hits. They've done all right through the summer. They've had a good year. Could it continue next year? Possibly. And if we do get some lockdowns, people are going to carry on, refurbishing and doing the houses up and tiling various things and carpeting their apartments and their houses. You know.
Do you know it's interesting because I read those results yesterday, was it, or something?
Yesterday, yes.
Yeah, I read them. Because what I tend to do is most mornings I'll have a look through on the sort of quality companies, and I'll make comments on Twitter on what I think of the updates and what I think of valuation and stuff. And that was one I did, and I remembered it because it's interesting what you said about a dividend, because actually the forecast dividend according to SharePad is 4.6%. Rising the year afterwards to 5%, which, is pretty damn tasty if they can achieve that. And I think there's a good chance they will. The forecast, there's a concept I wanted to raise, actually, and it's funny that you've picked a stock which lets me talk about this concept. The forecast PE is showing on SharePad as 10.6, and then the 2-year forecast PE is showing as 10. Do you know what? I'm so stupid because actually that isn't showing the concept I wanted to show. That's how it should be. As earnings rise, you'd expect the forecast PE to lower, to reduce. So that's actually going the right way, and that's reasonable value. What the point I wanted to raise was that when you have a PE that's rising, that's actually going the wrong way because it means that earnings are reducing. Anyway, the other thing I wanted to say on Tiles, because I've totally lost my thought train. A couple of things to mention. One of them is that it used to be more consumer focused. It's now trying to do more in industrial and selling to the trade. So that's a potential upside there. The other thing I'm pretty sure I remember reading in their update was that they said, was it something like 500 million of sales they want to achieve in the next few years? Something like that. And they were doing 200 million now or something. Can you remember something like that?
Something like that, yeah. It's part of their 1 in 5 strategies they're talking about, Pete, if I remember rightly.
That's it. Yeah. I like that kind of comment. I like that kind of thing where they've got a real sort of target and ambition. And you often see that in a stock. And I like seeing that, to be honest.
Yeah, that's their 1 in 5 goal. Looking for that sort of revenue, 1 in 5 by 2025. So they're on their way. They want to just push on, which I think it's always good to have that goal in mind and never be satisfied and just keep pushing on. So yeah, that's what I like about that.
Mate, so we don't get accused of ramping stocks, right? You don't hold it, do you?
I don't hold it.
And I don't either.
No.
Mate, before you do another one, can I just mention quickly car retail?
Go for it.
All I want to say is I used to hold Cambria Automobile, CAMB, and that got a takeover, and it was just a pathetic premium, and I was a little bit annoyed about it. But I noticed the other day, Marshall Motor Holdings, MMH, got a takeover, and I think it was up like, I don't know, 40, 50%, whatever it was. But I think there could be more consolidation in the car retail sector. The obvious one to look at is Vertu VTU, and that seems to have a very, very capable CEO and be quite well run. I don't hold it. And the other one that reported today was Pendragon PDG.
Yeah.
That's quite tiny. It's got quite a bit of debt, but it's like on a forward PE of 5 or something, or 6. I mean, that could definitely be a takeover target, that one. So that's one to consider. I don't hold it.
Okay. I was triggered by that Marshall thing as well. The premium was 44, 45% or something daft like that. And it was one of them that had been climbing. And all the talk, I think we spoke about it before, Pete, people still buying cars, why they're buying cars and buying blah, blah, blah. And the share price just kept climbing and climbing and climbing. And then wallop, it's been bought. So, yeah, as I said, there's more takeovers to come. I agree with you that there's probably more consolidation in that space. I've looked at a different stock that you haven't mentioned, thankfully, in that sector, Pete. I haven't bought any yet.
I'll stay stunned now.
No, I'm just doing some research on it, Pete. At the minute, I haven't finished my research yet.
I'm pretty sure I know which one it is, but anyway.
You probably will. You've been doing me a disservice of late. You have.
God.
But yeah, so I've got my eye on one in that sector. I don't want to overpay for it. I'm waiting to see. As I said, I'm a bit cautious at the minute, so I'm soon to be selling rather than buying at present. But yeah, we'll see what goes on there.
It's an interesting one with car retail because there's so much bad stuff that comes out about it, and you sort of instinctively think, "Oh God, the car retail sector's really in trouble." But you read their updates; they're doing really well, and it's weird. Yeah, it sort of don't make sense, but they are doing really well.
Yeah, they are doing well, mate. They are doing well.
You were going to mention a stock.
I was waiting for you, mate. This stock that I'm going to mention, Pete, it's a bit of an odd one, but I like my healthcare stuff, right? And I like my science stuff, and I like my tech, and this brings it all into one, and it's called Syncona.
Yeah. SYNC.
Yep.
Yeah, I know it.
You know that one.
Yeah, don't hold it.
Okay. It's a healthcare company focused on founding, building and funding global leaders in life science. And its current portfolio is made up of about 12 to 13 innovative companies. So you're getting a portfolio, of stuff. And occasionally something gets floated off or get bought up by somebody else and so on and so forth. And the focus is mainly on what they call third wave technologies. Yeah. So gene and cell therapy. Yeah, which are used in place of surgery or drugs. And that's the thing that I like, right? So they've got a long-term target of 15 to 20 development companies, from which over the next 10 years, the group expects to deliver three to five companies which reach the point of product approval, and where Syncona remains a significant shareholder over time. Yeah.
Yeah.
They released their I think it was half year back a couple of weeks back, and I've just been looking and tracking it. But the disappointing thing, obviously, is that not all of these work out regarding the companies that they're invested in, and the NAV actually fell by 11.4% at the time at 171. And I just thought, okay, let me just watch that a bit more. But it's a very, very interesting company in a bit of a sweet spot with regards to healthcare and tech and innovation. And it's just one that I was just suggesting for people. I don't own the stock, for people to have a consideration of and to consider doing some research of their own. I haven't finished my own research yet. I haven't purchased it yet, but it's one that's on my watch list. My watch list is getting bigger and bigger as we speak, and it's just I just think it's a very, very innovative company in a sweet spot, and it just needs a bit of luck. And it will get a re-rating. It's sitting at a premium to NAV at the minute.
Yeah.
At £2.12 in comparison to its NAV, and they've just made an investment, a co-lead Series B financing into a company called Quell Therapeutics. So, committed 19 million to the Quell thing, and they raised $25 million, 19 million, and they did a Series B financing of $156 million, 117 million in a Series B. So that's another interesting company there that they've invested in called Quell Therapeutics. So that caught my radar because that happened a couple of days ago. That other investment. So that's what's on my radar, Pete.
That's interesting because I know of Syncona because John Rosier is in it. So he's the guy who does the GIC, John's Investment Chronicle website thing, and he writes in the Investors Chronicle every month. John's in SYNC, and John's no fool, so that always gets me interested. One of the things I like about it is that it invests in very high risk, very high chance of things going wrong kind of companies because they're early stage and whatever. But because you're sort of buying a fund of them, it's quite a good way to do it. So I sort of I get that. So again, it's not one to put your whole portfolio on, but it's one that may do all right, and it's a good way of playing this innovation stuff.
Absolutely. It goes back to the concerns again that you've raised earlier, Pete. It's sitting at a 24% premium. Yeah. At the current price, I'm looking. We always go down to what's it done since it's listed and see how much we get. We get the 5-year annualized total returns percentage, right? So we've got 11.1% 5-year annualized, Pete. Yeah. So you're looking at every 6+ years, you're going to double your money there. So hold it for another year, and you get your 6th year, and you should have doubled your money there or thereabouts. 66% ish. Compounding it, you'll get to 66 plus nearly 70, doubled your money. 3-year annualized, it's actually minus 0.65 over the past 3 years, Pete.
Yeah,
so that's a bit worrying. It's had a bit of a tilt. 1 year total annualized, 12.65. So is it time for a turnaround on that stock? You've got a 1 year low of 163.4 and a high of £2.70 and a half, and it's currently sitting today at 212. So it's one to watch, mate. It's one to watch. I just think it's an interesting company looking to deliver superior returns by taking a little bit of risk regarding what they invest in.
Looking at the chart, it strikes me that just over 220, probably about say 225 to be safe. If you get a close above 225, or certainly a close above 230, then it's broken through a big zone of resistance, and that would be very positive.
Yeah.
So do you know how long did you say they've been going as a company?
I didn't, Pete.
Oh no, did you say you had 10 years of history when you?
I've got 5 years of history here.
5 years, so we know they've been around for 5 years. So so it's got some sort of established record. Chances are they've been around a lot longer.
Yeah,
so
they've probably been around between 5 and 10.
Definitely worth looking at. Definitely.
Yeah, so that's one that I what I'll do over the next podcast as well. I'll speak about some other stocks so people can research and give them some ideas and some suggestions of stocks to look at over the Christmas break for ideas of stocks that I do not hold.
Sounds good, mate. Sounds good. We don't want to be ramping stocks, so that's good.
Well, Pete, if we don't, we could do a podcast one day where we don't talk about any shares. That'd be quite an interesting mix. Just talk about psychology and see how many people actually get to listen to that one. I'm sure we'll get people commenting that we're not talking about stocks enough. So we're not going to please everybody. We're not in the business of trying to please everybody. I think the beauty is that the people that are listening and have listened to 63 out of 66 of our podcasts appreciate what we're doing. The numbers of people that are giving us feedback continues to increase. The number of listeners continue to increase. The number of positive feedback we're getting continues to increase. And we're always going to get some people that are unhappy with certain aspects of the podcast, and they have a right to be unhappy about some of it. And we have a right to listen to the feedback, and we will continue to listen to the feedback, and we'll continue to try and improve it.
You think about it, right? If we had a podcast where I was just blanked out of it and it was just you, that wouldn't really solve people's problem. It wouldn't be any better because it wouldn't make any sense.
Why? Are you claiming all the ramping on here, Pete? Is that what you're saying?
No, I'm the one who most people complain about.
No, they don't, mate. No, they don't. No, they don't. I think that's really rather unfair of you to say that. The beauty of it is, Pete, is that we're doing something. We're doing it for free. Yeah, we're doing it with God's good grace that we're able to do it and sharing what we learn, our mistakes, our warts and all, and people are learning from it. Yeah, people are gaining some insights from it. I spoke to a lady that works at the minute for the Telegraph, and she's one of our biggest fans. And I'm like, what? Why? What are you doing listening to this thing? It's like, no, I listen to it all the time. Yeah. Spoke to Algie Hall just this week. He's one of our big fans, and he writes for Investors Chronicle.
Hi, Algie.
Yeah. So we've got Edmund Singh, the lazy investor. Yeah. Also known as the idle investor. He's somebody that constantly listens to us. Got Phil Oakley constantly listens to us. There's a reason why they listen to us. Yeah? So we must be doing something right, Pete.
Well, mate, at the end of the day, we do what we do, and it's as it is.
We can't please everybody. I mean, quite funny. I'm not sure. I've never seen these things before. But just before we came on the show, there was at Ross Parker 5, right? And he's got something here called Spotify 2021 Wrap, where it just tells you which podcast you've been listening to the most, right? And he's got a picture here, and it says, your top podcast was Conker's Corner, which obviously means the platform. On Spotify, it comes up on the Conker's Corner label. But that's for Twin Petes. You listened to 30 episodes for a total of 3,801 minutes. Wow.
That's mad.
That's a lot, isn't it?
Wow.
And then we've got another one here from Andy at Flying Finance, right?
Yeah, we know Andy. Hi,
Andy. It says, and yes, it's a totally normal to consider your favourite podcast and host of a family member. Say thanks. So a lot of people are listening to it, mate. You've listened to 24 episodes for a total of 1,825 minutes. So people are listening, Pete. We're doing a good job, and we'll carry on doing a good job until people the majority tell us to stop.
Well, we'll keep doing it anyway, mate.
Well, I can't guarantee I will. But,
I need to get your views on things like LOK, so we're going to keep doing it, mate, whether people are listening or not.
Okie dokie. All right then, ladies and gents. We're here. It's the 1st of December. We'll do another podcast in 2 weeks' time. I'm hoping and praying Pete will be well enough. We've got a guest that's been sitting down under, a lady as well, no doubt. Pete keeps a lady waiting. How rude, right? We're going to try and get this lady on, hopefully in 2 weeks' time, depending on Pete's health. We're monitoring Pete's health. And if it improves, we'll get this lady on and do an early podcast one morning. So this lady is in Australia, and that's the reason why we haven't been managing to do it. So apologies again, Katerina. We will get to you and get it sorted. But until then, folks, wherever you are in the world listening, thank you ever so much for blessing us with your presence and continued listening. Thank you for your feedback. Thank you all for your kind donations to the Menphys Christmas list and the Twin Petes Challenge. We've done such amazing work with this, and we'll continue to do it. So I wanted to thank you all, and do what you can for others. As I always say, show some kindness, pick the phone up, check out everyone's okay. Some people are really struggling out there. So if you can be kind, whether it be on the phone, on social media. Just have a think before you open and say what you need to say. You don't need to be aggressive. You don't need to be rude. Show some kindness, show some consideration, because some people can't tolerate the slightest knock at the minute because they're already down and down low. Do something, say something that lifts somebody, say something positive, say something inspirational, and help somebody else out.
Absolutely. Thanks, mate. I'll speak to you next time.
All right, everyone. Take care. God bless. Have a great weekend and start shopping.
Bye.
Bye-bye.
This TwinPetes Investing podcast is brought to you in association with SharePad from Sharescope, the UK's #1 investment data and analysis software, for private investors and traders. Visit sharescope.co.uk and discover the advantage.